Good morning, everybody. Happy Friday. My name is Gareth Soloway here at verifiedinvesting.com, and we're going to get into the nitty-gritty data and the charts to look at what probabilities favor upside moves into resistance that we could potentially short or downside moves that we can go long. We'll look at the S&P. We'll look at stocks that are making major moves today like Celsius, United Health, as well as some others. And then we'll touch on Bitcoin, gold, silver, oil, and of course, natural gas. All right, so follow me over here, guys. We'll take a look at the pre-market action on the S&P 500. And what we're seeing here today is a gentle float. Now, listen, the market's kind of been wishy-washy this week. Yesterday, you could see, again, we had this nice drop to the downside that was on the back of Walmart earnings. And the reason why Walmart earnings affected the markets as much as they did is because it's about the consumer, right? We know that the engine of the U.S. economy is all about consumer spending. And so we saw the higher-end retailers kind of, doing all right because people are still making a lot of money, or they have been because of the wealth effect. But then a lot of people that were kind of in the mid-range, they started to rotate down towards Walmart. So Walmart was a big recipient, but now all of a sudden we're seeing Walmart starting to warn on revenue going forward. And so the markets came in initially yesterday, but you could see what happened. The buy the dippers are still very much alive, and what we saw is, again, the markets gently floating up into the end of the day. So when all was said and done yesterday, we did have a slight downside move in the market, but it wasn't crazy by any means, right? So now in the overnight, we saw sideways chop with a slight upside bias, and that's where we're starting today. Right now, S&P futures up about 5 to 7 points. And again, just going back to the daily chart, you say, okay, did the market favor a massive sell-off yesterday where we went and closed at the lows of the day and broke back down? Or was the chart telling us that we might hold this level for now? And the answer is it was telling us we might hold, right? So until proven otherwise, and that's the key to technical trading, is you have to make the market prove itself before you change your bias. So again, it was proving itself here. We had our high in December. We had our high here in January, and we got rejected. So it hadn't proved itself. It was still a rejected market, rejected market, rejected market. Here it closed above, and there it confirmed. And again, what confirmation means, the confirmation signal, it means that now this becomes major support, and the bias, whether it's just by a little bit or a lot, it now favors neutral to upside in the near term. All right, now if it ever confirms back below this line, we would call that a failed breakout, and failed breakouts are actually huge in technical analysis. It can often be the start of a much bigger move to the downside because, again, it kind of fools everyone one way and then flips the script. But right now, neutral to upside is what you're looking for on the S&P 500, and that's where the markets are trending at this time. Now, the NASDAQ 100 is still stalled at double top, right? So you have your pivot from December, just like the S&P. The difference is the S&P has confirmed above that high. The NASDAQ 100 has not. So again, it does show a little relative weakness in the NASDAQ. NASDAQ was down slightly yesterday, and as of today, it is up slightly. We're going to watch this level right here, right around 540 on the QQQ, which is the NASDAQ 100 tracking ETF. All right, we're going to touch base quickly on the 10-year yield just to kind of get our bearings going into the weekend. The 10-year yield continues to be in what I would call a bearish flag pattern. It's not a very good one, but it is nonetheless. Here's your flagpole to the downside, and here's your down, up, down. Notice how this lower level continues to get hit, and that's right where we are today. The 10-year yield is at 4.492, and it's right on this little level. If you break here, the bear flag should break, and that would trigger another move to the downside on the 10-year yield, which again, in general, is known to be a positive for the S&P 500. The DXY, which is the dollar, checking in on the dollar, it is still below the neckline of the head and shoulders pattern. And again, that means that the bias remains to the downside. When I say bias, I mean probability. The probability remains to the downside towards an ultimate target of 104. Again, that's a measured move. If you take this distance from the break point, and that is the distance from the head, the high of the head to the neckline, again, you take that distance, and from the break point of that maps it out to that target. That's how you calculate a target of a head and shoulders once it triggers. Now let's get into Celsius, guys. So first and foremost, Celsius today, folks, what a move here, a massive move. Now listen, What have I said about Celsius for the last few weeks, few months, whatever it may be? I've said to you guys, Celsius is a coiled spring. It's down 75%. They're a profitable company trading at a lower end PE based on the fact that it's fallen so much. I said to you guys, at some point, this is going to rip to the upside. Well, I guess some point was yesterday on the back of earnings. If we look at the chart again, you can see here, initially it sold off a little bit and then it just started to rip. And again, they're buying out Alani Nu for about $1.8 billion. Essentially, they're starting to build their brand and build it bigger, make it into a much wider variety, a kind of offering of energy drinks and sports drinks. Either way, the stock is now at $34 and change after yesterday during the trading day being around 25. We can see right here, if you look at these are my favorite charts, by the way. Now, listen, you can find a lot of crappy companies that have charts like this that won't bounce, but when you find one that has a profitability package, when they have low debt, when they have a lot of these things, you look at this and you say, all right, listen, you got like a little wedge pattern brewing here. All right, look at that little wedge breakout over the last couple days. That was a bullish sign of either short covering or a very, very positive signal of maybe some insiders loading up before this bigger move. And then the other thing that I pointed out, and this is something I've talked to members because we had this in Smart Money stocks and ETFs, is that if you go to your bigger chart, I want to show you guys this because I do think it's really darn cool. Let me see if I can find the level, but I think it was right here. If we go here on the chart, yep. What was the Fibonacci retrace from when this company first started, when it was at its dead lows in March of 2020, right? So it was trading before then, but March of 2020 was its lows to its highs up here, a perfect 786 Fibonacci retrace. So again, and by the way, you can see the little support area right in here, some support as well. My point being is that, listen, not every company is going to do this, but like Wolf, I've traded with my members of Smart Money stocks and ETFs now 3 or 4 times in the last couple months. We basically buy when it's in the fives. It looks like a great setup. It pops up 30, 40, 50%. One time it went 100% off of its lows. And these type of charts, the Wolf chart was the same type of chart here, and that's the beauty of this, right? You're looking for this repetitive pattern formation on companies that are solidly valued or cheaply valued but have solid financials, and again, that's the key. Now, I do have one that I'm watching very closely here, guys. I will give you my next favorite one. And listen, no guarantees. We know that trading is anyone, it can always be wrong. But my point is, this is one that I continue to be relatively bullish on. Here's your wedge pattern. The stock is Biogen. It is down from $300 to about $138 down here. And the idea behind Biogen is that really, at some point, I do think it moves up. And the beauty of this here, and again, I wasn't planning to do this, but let me see if I can, guys. I want to see if I can show you guys this stuff here. Let me go to Yahoo Finance, which is just pulling some data here. I guess I have to type it in here. Bear with me. All right, so let's look at Biogen. I'm going to do a little case study or showing you guys how I analyze these things. Okay, so if we look at Biogen, right now it's up 30 cents on the morning session. And what we do is the first thing I do here is I bring this down and I say, okay, it's a $20 billion company. So it's not a big company. It's trading at a current PE of 11. Now I say to myself, okay, well, does that, how does that compare to the S&P? And I say, wow, well, the S&P is at 24 approximately. It's very expensive. So this is relatively cheap. And I say, okay, but is there a reason it's cheap? So I go over here to statistics and I bring this up and I say, okay, let's look at the inside data, the financials of the company. And what I like to do is I like to look at cash. So they have lots. They have over $2 billion of cash. Now they do have $6.7 billion in debt, but they're making $1.6 billion a year in net income. So really, $6 billion in debt doesn't matter too much. They have enough to do a share buyback if they so choose, where they could buy back a decent amount, about 10% of the company, and that's positive as well. Short ratio here, 2.9%. It's not really a candidate for a short squeeze. But what I like to do then is I go to the profile and I say, okay, well, number one, we're looking to see what does this biotech do? We know biotechs are kind of mid-level. And what I harp in on this is if we look at this and we see a bunch of drug names, right? A lot of drug names. But what we're looking for is keywords, multiple sclerosis, right? Big potential drug there. Then we're looking for other terms. I'm just scanning through here. They have an Alzheimer's drug, right? Muscular atrophy right here. I mean, these are things, and again, I think the big next thing looks like non-Hodgkin's lymphoma here. Wow, that's great. Rheumatoid arthritis. So these guys have a lot of things in their pipeline. And then lastly, what I do, and I'll just summarize this, I don't want to waste too much time on this. I go to this, which is earnings estimates, and I say, okay, so in this year, they're supposed to make $15.72. And now I use my simple calculator. I mean, we all do this, right? We all use our calculator. I say, okay, so $137 per share divided by $15 in earnings and 72 cents in earnings per share. That's your forward PE, 8.7. And so you guys see what I'm doing here, right? So essentially, when all is said and done, I'm looking at a stock that has an 8.7 forward PE, which historically is ridiculously low. They have Alzheimer's drugs in the works. They have big potential. And by the way, Alzheimer's drugs, in my opinion, that's the next weight loss drug. Meaning that, like, if you remember what Eli Lilly did and all these other stocks, that's going to be your next one. That probably, if any of these guys ever figure it out, which I think inevitably will happen, you're talking about a run like Eli Lilly had, which is 100, 200, 300% off of its lows. So again, these type of things are catching my eye. And then lastly, of course, if I walk over to the big board here, it's the chart, right? So again, the chart downsloping wedge at the low end, literally since I think like 2016, it's down at these lows. If you get a breakout here, you can really start to make some significant moves. And so listen, the first thing to just always remember is that I've been wrong before and I'll be wrong again. All right, but if you look, and the reason why I went through the financials with you was to kind of show you what I look for when I'm looking for these hidden gems like a Celsius or a Wolf and bringing it to people's attention, is that I'm not just looking for crappy companies. Like, you want crappy companies, you go to Wall Street Bets. Like, they'll pump and a lot of those will run, right? Because you get enough. I'm looking for, at least I'm trying to find quality that is discounted abnormally, that again has something in the pipeline or has something like Wolf has these much more energy efficient chips that could be really, really good for data centers to save energy, etc. Like, there's got to be some little hook there that makes sense, that eventually bigger institutions will be like, oh man, we got to get on board with these type of plays. All right. Enough said on that, guys. Just a little Friday case study on a potential player. In any case, going back to Celsius, guys, which was an awesome alert for you guys here. Celsius trading just under $35 per share. Where would I get interested in shorting this? First of all, be really careful because a stock like this could go parabolic. I would not mess with this, honestly, until it gets to 50. Not to say it's going to go to 50, but that would be the first area on a technical chart where I would even consider pulling the trigger on a short. All right, and that's still about $15 away. If it gets up there, there might be a day trade there. We'll have to watch and see. Now, UNH is getting hammered here, guys. What a drop on UNH. Take a look at that fall today. The kicker here is UNH is dropping on the back of a DOJ, Department of Justice, in investigation into the Medicaid, I believe it is. So it's a matter of, and this is going to like kind of curb all the waste, right? Are the doctors that are, doing things for these people, are they overcharging? Are they charging for other things that they shouldn't be charging? And UNH obviously could really be affected in that way, and that's why the stock is down. Having said that, it's trading just around 440. If we go to the daily chart, where would a potential trade level be? Well, guess what? You got a pivot low here at 437. In fact, I think we just hit that pre-market. That was a level here. In fact, I picked up a small position. I think I already got out of it. I put it for a $4 gain. So that's awesome. But again, a little bit of a pivot low right there. Makes sense for support. Now, again, it's already hit that, so now I have to go during market hours to a lower level. And the next level I'm finding looks like around 424 to 420, 425 to 420, somewhere in that vicinity. You can see this little area right back here. Block, which is XYZ. They changed their symbol from SQ, which was square. They were formerly known as square. Now their XYZ is the symbol. They're at 74. That fills this gap here, but because it's already been filled and pierced, I'm not looking at that. What am I looking at? I have a level here at 7150. This is also a 618 Fibonacci from this low, right, to this high. So that's a 618 Fibonacci at around 7150. And then you have this area right down here, which is this around 69, 10, 69 even number. So again, 71, 50, 69, 10-ish. Those are my two levels today that I'm going to eye in on XYZ to potentially trade. And then there's Rivian, guys. Again, Rivian, I got a lot of old lines on here. The stock's down a little bit on earnings here. More than anything, I did hear that the government may claw back one of their loans or their grants that they gave the company. So again, I think the stock is more down on that. They also talked about sales slowing in the coming year as well. Lastly, Tesla. Tesla's not doing much, guys. I still think there's more downside on Tesla. I know a lot of people don't want to hear that, but based on the chart, I still think at some point we have to come back into this major technical support at 269 to 270. Originally, my first level of support was this gap fill. Actually, we hit the 360 level. That was my original. Then the gap fill here at 321. But look at how close price came. It came and kissed it. So now this no longer would be a technical level. It's what we call an in spirit of hit of the level. Okay? And then lastly, NVIDIA, guys. NVIDIA is still respecting the gap fill, but kind of chopping here. We'll see if it can close above. If it closes above, it could run up to this upper trend line around 155. We'll keep an eye on that. All right. Bitcoin. I'll go to the big board for this, guys. We'll take a look at Bitcoin here. So Bitcoin is doing at least it's starting to do something, because it has been darn boring here, guys. I'm not used to this with crypto being so boring. You had a very tight range here. I put these lines in yesterday to denote support, like a tinier range. So we know the big range, right? The big range goes back all the way to basically December. All right, since it was made its all-time highs. But inside of the big range, we have this range. And you can see, again, every time it gets up here, it gets rejected. Down here, it gets bid. Well, guess what? Watching today, can it break out of this smaller parallel or channel? If it does, it raises the probabilities that you head up at least and test this upper level here at 108. So again, we're going to keep a close eye on that. If it gets rejected and closes back in, well, then it's still stuck in the tighter range, and we're watching to see which way does it break out of that tighter range to let us know what the next technical level will be. All right, let's look at gold really quickly here as we go through. Gold not doing much, still stuck on the low end or the just below the high of the doji. Again, we're so close to 3,000. I will say this, guys. So this is important. I'm going to go to the big board for this because I think it is that important to talk about. So if we flip back to gold here, what we can see is this is your doji high. So that right now, going up till today and maybe even into Monday, that means that the bias is slightly negative, right? Dojis aren't great bearish signals when they occur at highs of charts, but they're okay. They're not as good as topping tails, as I've said. But there's a change here. There's something that's on watch. And this shows you as a trader, you have to be mobile. You have to be willing to adjust your views. So what I'm watching now is this. Up move. What is that potentially forming? Bull flag. So yeah, granted, this still carries right now a slight negative bias because of this candle, and it's held it in check. But because of this, now you're starting to get bullish consolidation, which would then adjust the probabilities, right? So if you, let's say it was a 55% chance of downside with the doji high there versus 45 up, if you get a bull flag, it might flip that to 55 favoring the upside to 3,000 versus 45 to the downside, even if the doji high is not taken out. These little nuances, guys, it doesn't come overnight. And I do these videos, I do the game plans, I do trading closes, because you guys, if you see me doing it over and over again, and I do so many of these a year, every day the markets are open, I do a game plan, right? So the idea is this education, you may not get it the first day, you may not see it, but I promise you that in a few years, or depending on how much focus and study you put in, you'll start to get these same things where you start to understand the change in bias. Right, a lot of people are like in a position, oh, it's a great bear flag, it's going to go down. And then, a month later, it's still kind of in that range, and all of a sudden it goes the opposite way. And they're like, man, why did it do that? The chart usually tells us. It's up to us, though, to read that and recognize it. And that's the hardest thing to do, especially when we have an internal bias that wants to see a certain move occur. All right, next up, let's take a look at silver here. Silver is basically flat today. Now, this does not have a new bull flag, so this is still a kind of a negative signal here, but at the same time a float. So again, I'd kind of give this a 50-50 like I've told you guys the last couple days. And then oil today, let's take a look at oil. Oil is inching lower. It had a few up days this week, now coming in a little bit, but this is all chop. No interest whatsoever in oil here. Natural gas did have a nice pullback yesterday, but again, bouncing right back up today. So we'll have to keep an eye on this and see. Max upside, well, I shouldn't say max, but resistance remains at around 440. The reason why that 440 level is key is it's a gap fill right here. So we'll watch that very closely today. But again, interesting, if you look at the 10-minute chart, look at this, guys. This is incredible. Wow. So natural gas dumped out, and now it's ripping to the upside. Wow. That's pretty remarkable here. So we'll have to see. There might even be a trading opportunity on this at some point in the next few hours if it keeps pushing like that. It's getting very near-term extended. We might be day trading it in the Apex Live day trading room. All right, guys. So that's a summary of what's going on here. We do have a little economic data coming out at around 10 a.m. that I'll be cued into. But aside from that, amazing week, really was. Whether you were in the services or not, great stuff. Love seeing that move on Celsius pan out. We'll see what happens with some of these other opportunities that I've laid out for you guys. But let's go into the weekend on a good note. I do want to thank you, as always, folks, for being supporters here of Verified Investing. It's you guys that enable us to do and me to dedicate time to teaching, and I do thank you guys for that. So you guys have a great weekend. I'll talk to you soon. Take care.
I have completed that chapter. Let's go back to the module overview. Now I'm on trust and transparency, but let me see how my ranking shapes up now. I'm ranked 175. Hopefully we can keep grinding higher.